In this video, we'll be taking a look at gold, Nasdaq, and crude oil. So it's going to be a brief one. Markets aren't looking too pretty as I'd hope for this week. So starting with the gold charts on the 2 hours time frame. Before we get started, if you love the content, please like, subscribe, leave your thoughts in the comment section down below, and I will do as much as my best to respond as soon as I can. If you're interested in learning to trade Forex like a professional, check it out on Complete Forex Trading course on Udemy. It's going to help you a lot, right? We've got almost 5,000 students, I think. So just check that out, get the course, learn. So getting started with the gold chart on 2 hours time frame. Last week we talked about the possibility of price taking out this area of resistance, and we did get that. Right? Was it last week? Yeah, I think last week. So last week we expected price to take out this area of resistance, and we had a massive move to the upside, which was approximately now 550 pips or 500 pips, as the case may be, depending on where you have your entry, right? So I do believe a lot of you took advantage of this setup, as we shared last week. Right now, we seem to be trading close to the area of resistance, which would eventually lead to all-time highs if we do break through. So as usual, what I'm watching out for is more consolidation around this area of value, followed by a bullish breakout to the upside. So this will give us some sort of confirmation that the bulls are ready to step up to keep pushing the price higher, based off of the current or the past price movement we've seen on gold, right, which has been bullish, price creating higher highs and higher lows. You can see 1 2 3 4 5 6 7 8. So this is just a mini bullish trend, not like so comparing this to this overall bullish move over here. So looking at this move over here, right, up, consolidation, up. So this the overall trend is bullish, and we also have a short-term bullish trend here. So there's no clue as to when this short-term trend is gonna end. So what I mean is, sometimes when you get bullish moves like this, you tend to see pullbacks. So a move like this, then you see pullbacks like this before we resume the movement to the upside, right? So waiting for this massive pullback to happen right now is doesn't sound realistic, right? I think that's going to happen when we take out these all-time highs, but mind you, anything is possible, right? So until I see something that suggests we're going to get a big pullback like that, then I'm going to stay with my bullish bias, right? So to reiterate once more, waiting for a bullish breakout will be waiting for more consolidation around this area of value, followed by a bullish breakout. So this gives me better confidence, better sort of confirmation, indicating that bulls are still in charge and market is going to keep going higher until something else happens in the market. So entry is going to be above that breakout. Stop loss is going to be underneath the consolidation list of the breakout. So when you see good trends like this, you ride the trends for as long as they last. Don't start thinking, oh, I think it's time to go bearish, I think it's time to go short. Don't be like that. Okay, follow where the market leads. If you see something on the market that suggests we may start to go lower, then you follow accordingly. But for now, there's no clue on charts that suggests price is going to tank right now, other than the fact that we are bullish and it seems we're going way higher, right? And to give you just an idea of how high we could go, right? So this is how you measure those estimated price levels before you get to see some sort of massive pullbacks. So the way you do it is you take this a range within the symmetrical triangle, because this is the massive consolidation we had before the current move to the upside, right? So you take that measured price movement and you put it around the price where we had our breakouts. So that will be over here. So if you do this, this means there's a good chance we rise all the way to $2,980 per ounce of gold before we see some extended pullback to the downside, right? So this still gives us a potential massive move of up to 2,000 pips, right? So 2,000 pips approximately is what we are expecting to make from this current chart pattern before we kind of start to see some sort of extended pullback to the downside. So something like this, more movement to the upside, maybe slowly grinding upwards, then before we get those massive pullbacks to the downside, then another move to the upside. So this is what I'm watching out for on gold. So there's no reason to be bearish right now until I see something on the chart that indicates we are likely going to go lower before I turn bearish. So for those who want a bullish, a bearish bias, to go short, that'll be waiting for price to retrace all the way back to this area of value before we move higher. So because this is the current area of resistance where we had this rejection before we had our good breakout. So if price comes back into this area of value, this could be a good point to start to look for those good buys in continuation of this current short-term bullish trend we have. So this is totally possible, right? It's totally possible. But looking forward to extended price declines going all the way down here, I don't think it's realistic right now, in my opinion. Not until we see those things happen. I'm going to stay bullish, and waiting for a pullback would be waiting for price to come into this area of value before you go long. And I don't think you want to gamble with going short around this price level, because the price movements down here, before you are able to spot a trade entry all the way down to this price level, this will give you approximately 300 pips, and it's just too risky because there's no guarantee that we do come back to this area of value, but it's possible, right? So waiting for a breakout. So if we don't get there, so waiting for a consolidation over here followed by a breakout is a much more realistic approach to looking forward to a buy position on gold right now. But if market comes here, I will also be looking forward to buys, because it's just going to give you more risk to reward ratio, right? So if you enter after the bounce, stop loss is going to be underneath the retest, and first target can be these highs, where you ride the rest of the positions as we go higher, or if we do go higher. So that's it briefly for gold. I hope it's clear enough. If you disagree with me, please leave your thoughts in the comment section down below. If you're interested in learning to trade price action, exactly how I trade them, you want to learn how to analyze the market like I do, go check out our current Forex trading course. I made that course personally, over 20 hours worth of videos. It's going to teach you everything you need to know about price action and how to start, putting in your trades yourself. Moving on, we're talking about Nasdaq. So Nasdaq US 100, we've been talking about this for a while. I think the last time we spoke was about getting an entry around this breakout, right? And that has moved towards approximately 300 to 400 pips since then. So right now, we seem to be consolidating, right? After this bullish move to the upside, we seem to be consolidating with the market trying to decide on where it's going to head next. So the way I'm going to do this is take out these highs, right? So this is a logical area of value, a logical resistance level to watch out for. And I'm going to see if we do get more consolidation underneath these price levels for us to get a bullish breakout. If this happens, my entry is going to be after the breakout. Stop loss is going to be underneath the consolidation leads to the breakout. First take profit target, I would like to put it here, but it's just too close in my opinion. So I might just hold the rest of my positions, because I think we're going to blast through these highs, going to all-time highs. All right, so this is my brief outlook for Nasdaq. I'm not going to be talking anything about being bearish, because I don't see any reason why I want to go short in this setup right now. This is a classic bull flag, right? So classic bull flag, in the sense that we have a bullish move to the upside, consolidation, and now a breakout. So this is a no-brainer, right? We're going higher as the chart suggests. So it doesn't rule out the fact that market can do whatever it likes to do, but we trade with technical analysis, price action, follow the chart wherever it leads. Right now, it's pointing towards the upward direction. All we have to do is pick out our trade positions, trade entry, so we can take advantage of the price movement as it goes higher. That's based off of the price action I can see on chart. So good consolidation, bullish flag, good breakout, and now another consolidation. So to reiterate, I'm going to wait for a consolidation, retest, followed by a breakout. This happens, entry is going to be after the breakouts, stop loss is going to be underneath the consolidation leads to the breakout, and I'm going to trade the rest of my positions as we go higher if I decide to take some positions around these highs. But it's just too close in my opinion, and I'm just going to let go and let my position ride. But what I'm going to do is, when price gets to this area of resistance, I could easily adjust my stop loss to my break-even level, so I can run the trade risk-free. That's it briefly for Nasdaq. If you think we are going lower on Nasdaq, please leave your thoughts, leave your charts in the comment section down below, and I'll do well to check them out. Lastly, we'll be talking about crude oil. So crude oil on the daily time frame. I really don't have a trade opportunity on this right now, but the reason why I'm reviewing this chart is so I can, give you some sort of warning as to my expected outlook for crude oil over the coming months, right? So we all know Donald Trump right now is the president of the United States and is keen on bringing the prices of gases and oil down, right? So he's going to do everything in his power to make sure oil prices are cheaper, right? Because it leads to lower cost of energy and all that. So that's the reason why I believe crude oil is going to trend downwards for a few months. I don't know if it's going to, I don't think it's going to happen right away, but we can see some signs of those fears that Donald Trump is likely going to cause some market declines on crude oil. So you can see those price action acting out on chart already, right? So for us to go short, I'm going to go down to the lower time frame. So let's see the 4 hours time frame, for example, to see how I would trade crude oil right now. So last week I explained that I won't be going long over here, not until at least we get a consolidation like this, right? Talked about a consolidation like this followed by a bullish breakout. So obviously that didn't happen, so no going long. So right now, because of fundamentals, so fundamentals is what's driving the markets mostly right now, right? Which would print out reasonable price action on chart for us to make our decisions as to whether to go long or go short. So for me, to go short, I'm going to wait for price to decline closely into this area of value, consolidate a little, followed by a bearish breakout. So if this happens, entry is going to be underneath the breakout, which I would hope will take out this area of value. So you can see a clear area of value over here. Bounce, bounce, reversal, 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 breakout, right? So good area of value, and I'm going to wait for price to trade underneath this area of value before I think about going short. So that will mean waiting for my consolidation to happen around this price level. So just because price gets through this trend line doesn't mean you want to jump into those trades, right? So wait for a good consolidation and wait for a good breakout underneath this area of value before you go short. So entry is going to be after the breakout. Stop loss could be as high as these price levels depending on how the consolidation is formed. First take profit target is going to be around these lows. This is how I'm going to trade crude oil. Then I'm going to wait for more consolidation on these price levels, followed by another bearish breakout to the downside. So if this happens, this is my classic setup to trade crude oil, right? If we do see those massive price declines to the downside, following fundamentals from the interests of the president of the United States, right? So this is just something to watch out for. If you're being bullish, I don't want you to see price coming to this area of value and start looking forward to going long. Where that could work, there's also a risk of us going down, right? So just want you to be aware of those possible scenarios with fundamentals as well as technicals for you to make informed decisions. So depending on how the price action evolves, I may not be trading crude oil, right? So for now, I'm just going to focus on gold and I'm going to focus on Nasdaq. These are the two currency pair, the two trade instruments I'm focusing on right now this week to see if I can make some nice returns on my trades. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. Once again, if you're interested in learning to trade Forex like a professional, want to learn price action, market structure, trends, everything you can think of regarding trading the financial market, not just Forex, you could use these skills to trade stocks, crypto, whatever it is you prefer to trade, right? Just check out the course, check out the curriculum, and I think you'll find it interesting. And it's not too expensive, right? Just a few dollars, and you can get started with trading today. So that's it from me, guys. See you next week.